To develop domestic government and corporate bond markets, it is important to have the following key conditions in place. These are the 5 building blocks that can reinforce each other. Sound macroeconomic framework provides a stable and conducive environment for bond market development. Both domestic and foreign investors will be reluctant to purchase domestic bonds when there are expectations of high inflation, large devaluations, or high risk of default. If a country is perceived as not having the ability to manage its public expenditures and tax revenue, or has built up substantial debt obligations, investors will perceive a high default risk and the cost of financing a government borrowing will rise. Having a sound macroeconomic framework also includes having a clear and credible bond issuance strategy and debt management framework. The development of the banking sector can feed bond market development. In many countries, banks are major holders of domestic government bonds, which are generally seen as relatively safer assets and serve as collateral for a variety of transactions. Banks can also act as a primary dealers to improve market liquidity. In contrast, domestic and foreign investors' concerns about the soundness of the banking system will adversely affect the ability of the government to roll over or issue new debt. A troubled banking system can further complicate the development of bond markets because important related markets such as interbank and repurchase agreement transactions are unlikely to function properly. A sound legal and regulatory framework governing bond markets supports the development of a deeper, broader, and more efficient bond market. One risk that exists for bond investors is the risk of default. So it is critical to have investor protection, which is provided via bankruptcy law, property right legislation, and bond covenants. A well-functioning financial infrastructure is needed to ensure the security and enhance the efficiency in bond trading. Financial infrastructure here refers to the physical underpinnings for a financial market, exchange, including trading platform and trading system, and the market regulator and the industry that processes, evaluates, and validates the information being produced and used by the markets. Opening up to institutional and foreign investors have built a critical mass of investors to provide market depth and liquidity. Governments can jumpstart bond market development by opening up to foreign investors gradually and carefully. Institutional investors can exert pressures for better accounting and auditing standards, as well as for a more accurate and timely disclosure of information to investors. Sound macroeconomic framework often needs to be in place first, followed by sound legal and regulatory framework before banking sector can develop and function well. Opening up to institutional and foreign investors can be introduced as the market start to develop.